Is AI a bubble? Yes, of course it is. My name is Hamilton. I'm here at the Trading Initiative. Over the next 10 minutes, I want to give you my 2 cents on why most people are going to end up losing their ass trading this bubble. First things first, I need to let you know, doom porn clickbait titles like this, the current AI bubble is bigger than the 1990s tech bubble. No shit. There's a lot more money in the system. Of course, this bubble is going to be bigger just based off of the fact that the M2 money supply is huge compared to the 90s. So yes, of course, the bubble is going to be bigger. But let me start off this quick 10-minute rant by telling you that I read The Alchemy of Finance over the weekend. I had a long drive. And essentially what this book is doing is talking about George Soros' theory of reflexivity. He gives a bunch of different examples of how he was able to profit and actually lose some money by not playing along with the theory over the last 30, 40 years. It's a fantastic book. It's a quick read. It's not going to make you a better trader, but it does give you an awesome peered view into George Soros' incredible investing mind. He's a piece of shit outside of the investing world, but an absolutely incredible trader. And inside this book, he talks about the fact that reflexivity, essentially the premise is that it's a self-fulfilling prophecy that when the market believes something is happening, all of the market participants believe something is happening, it generally happens, and it generally happens in a greater force than what it normally would on both sides. Bubbles going up are going to bubble up even higher because people are going to be chasing the bubble. When the bubble bursts, the bubble's going to burst way worse than most people expect because most people are going to lose their ass, and then you got the short bias traders coming in to attack it as well. He says in the book, The Alchemy of Finance, that you should not wait for the bubble to burst to make your move. There is an incredible amount of money to be made on the left-hand side of the bubble. So let me go ahead and show you something really quick. There's this chart going around on Twitter about NVIDIA and Cisco. Let's actually look at this. People are saying Cisco, NVIDIA is the Cisco of this AI bubble. Maybe it is, but I'm going to start with this, and then I want to give you my opinion on this. Essentially, they're overlapping NVIDIA's price action from 2020 over Cisco's going back to 1996, and they're trying to illustrate that, hey, maybe NVIDIA is about to peak, the bubble's going to burst. And we know what happened with Cisco. It took the next 15, 20 years to really actually do anything. Is NVIDIA kind of in the same boat? Maybe. I mean, there's no 100% here, but I want to point out a different idea. Via Tom Lee, he's stating that maybe NVIDIA could be the Cisco. Absolutely. I don't think anybody's going to disagree with the fact that there's a bubble forming. Now, you can argue about how much of this is going to stick around after the bubble bursts, but there absolutely is a bubble forming. Tom Lee from Fundstrat saying, listen, if NVIDIA is the poster child, if NVIDIA is the Cisco of this bubble, we have a lot more to go. And this is what George Soros would look at in The Alchemy of Finance and go, I'm ready to max long the front side because a bunch of idiots are also going to max long the front side, and there's no reason to miss out on this. I prefer to get in, make a bunch of money, sell when I'm okay with selling, and then catch the backside move if I can. There's no world where George Soros would not participate in the left-hand side of the bubble. And I'm going to tell you something. Stanley Druckenmiller is going to participate on the left-hand side of the bubble. As a matter of fact, he is. He's selling some of his NVIDIA right now, diversifying across some other lower beta areas to I'm assuming smooth out the volatility in his portfolio, but he is not selling all of his NVIDIA. This generation's greatest investors and traders are long NVIDIA and are continuing to get long NVIDIA right now. Guys, let me show you something really quick. First things first, if there's going to be a bubble burst, let's go back to the Bank of America Global Research secular bear versus secular bull chart here going back to 1930, right? We have almost 100 years worth of data, and you can see the secular bears versus secular bulls. Secular bear, secular bull. Go ahead and look at the average time that these play out. 10 to 15 years for the secular bull, 15 to 20 years for the 10 to 15 years for the secular bears, and 15 to 20 years for the secular bulls. We are in a secular bull market starting in 2013. We have a triple top breakout that gave us the kickstart. Through COVID, we are still in a secular bull. Guys, we are in year 11 of a secular bull. If statistics matter to you, if history matters to you, we have at the very minimum 4 to 5 years left of a bubble, or not a bubble, of the secular bull market before something causes this secular bull market to implode and we potentially enter a secular bear. Now, I do want to point out the last secular bear we came into was the dot-com bubble, right? Dot-com bubble burst here. We came down, we came back up, retested the GFC, came back down, came back up. 2013, we broke out. Here we are, the backside of COVID, into all-time highs in a secular bull market, the 11th year. Statistically, we have minimum 4 years, but generally anywhere between 4 to 4 to 8 years left of this secular bull market. That's a lot of time to expect an AI bubble to just burst after 2 or 3 quarters of ramp up. It's probably not going to happen, guys. It's probably not. As a matter of fact, if we go back and actually look at SPY on the weekly, we can see exactly what we were talking about here with this secular bull versus secular bear. If you look at when the dot-com bubble actually started, we should probably, let's use SPX instead of SPY here because we have a lot more data. If we go back, it started around 1995 off of a double top breakout. So let's go back to 1995. Where are we? Right here. 1995 is generally when people agree that the dot-com bubble started to form. 1995, somewhere around January, February, we broke out of a double top and into new highs. And for the next 5 years, right? The next 5 years, it was just unadulterated up. Pretty much just go straight up. There were 2 drawdowns of 10% or more, one in 1997 from the Asian financial crisis, which our boy George Soros participated in, and then one in 1998 from the Russian financial crisis, ex-Soviet Union stuff. Other than that, for 5 years straight, we went basically straight up off of a double top, and this is when the bubble formed. The entire 5 years is that bubble that people are talking about for the dot-com. Obviously, we peaked, we broke down, and I do want to point out that this was a very nasty breakdown. The market lost nearly 50% of its value. It took forever, right? It bottomed in 2002, all the way to 2007 to regain where it originally actually hit that all-time high, and then we even came back down even harder in the GFC, right? We bottomed out in 2009-ish, before breaking back up, and 2013 was generally agreed upon as the next secular bull market starting. So from 2000 to 2013, we were in a secular bear market, and it started with the dot-com bubble. But once again, I want to point out, how many people do you think were shorting this bubble that blew up? Oh, I don't know. I can tell you one guy right off the bat, Stanley Druckenmiller, famously lost billions of dollars by shorting the dot-com bubble and then longing the absolute top. And when you go and you actually look at what he did, he says, I didn't learn anything because I knew I shouldn't have been doing it to begin with, right? These bubbles can form and last a lot longer than most people expect. If this is a bubble, if the AI idea is a bubble, we are just breaking out of a potential double top that everyone's looking at. I'm not saying we're not going to pull back and retest this level and then bounce. I'm not just saying we're going to go straight up parabolic style, but guys, come on. We have 4 to 8 years left of a secular bull market, historically speaking. We're coming off of a double top after, by the way, a absolutely abysmal bear market. We came down 25%-ish. Right? 25%-ish. If you look at XLK in general, actually, let's just pull up the poster child, NVIDIA. If we look at NVIDIA, the actual move from top of bull market to bottom of bear market, 66% move to the downside, and people expect these things to continue to come down. Semiconductors in general got absolutely slaughtered during the bear market. Look at this, 44 to 50% off of some of the biggest names in the AI right now came back down and sold off during your bear market, and you guys expect them to continue to sell off in the short term. You guys are friggin' crazy. Once again, if we go back to SPX, do I think that this bubble is going to just pop next week or within the next quarter or two? Absolutely not. I am siding with George Soros. The idea of reflexivity, the statistics behind a secular bull market. We're in a cyclical bull market that started at the beginning of 2023. Everything is screaming that we are going to continue to move up. So here is my 2 cents. I'm going to buy every dip I can in semiconductors until the bubble bursts. I probably won't be the last asshole out, but I'm for sure not going to be the ornery asshole that just complains and screams that everything is a scam for the next 1 to potentially 5 years and be that asshole praying for the downfall of everybody. I'm just going to join. I'm going to enjoy myself. I'm already very, very long arm. This is one of my best trades I've taken over the last 2 to 3 years. I wonder why. Maybe it's because semiconductors are going absolutely nuts and I'm not an asshole screaming that everything is a scam. Guys, my name is Hamilton. If you like this type of content, please like and subscribe. Leave a comment below. Let me know what you think. Is this a bubble? I think it is. Does that mean we can't participate and make a bunch of money on the left-hand side of the curve? It's up for debate, but I'm not going to miss it. Let me know what you think. Catch you next video.